Hi guys, once again this is Alfred for BinaryOptionsTutor.com here today to talk about mean reversion trading, and we're also going to talk about how to use volatility and specifically how to use our volatility indicator that we just added to our website. This is a free indicator, online indicator, which you can access by just making a free account on our site, BinaryOptionsTutor.com. Everyone knows, well, not everyone, we're not really that famous, but most guys who have followed our channel know we have a history in sound engineering and music, and we call the this indicator that we came up with the quantized volatility sample because uh, quantization is very important inside of rhythm, and volatility is really kind of like the rhythm of the market. That's another way of looking at it, how much the market is swinging, how fast the market is swinging. So it's kind of like the tempo and the rhythm of the market. Now, we've got about 11 Forex pairs on here, and this is updated every hour. Let's look at some uses for uh, for this table and how to use volatility and get it is a part of your trading, and just a little tool to help you uh, do some good statistical analysis. Now you can see as the hours were progressing, markets just getting slower and slower and slower right here on the dollar yen. Now, just like I talked about on the price action squeeze video last year, once you start to see this squeeze in volatility, sooner or later, the market's well under even the average volatility. So it tends to pick up and begin to expand. The volatility itself will expand. And it doesn't talk about which way it's going. It's just saying that the market's going to expand and volatility is going to pick up. If the market gets super, super volatile and we were overdoing these numbers dramatically, then at a point the volatility in the market is going to all of a sudden compress. Well, not all of a sudden, but at a point it's going to have to compress, because the thing about volatility is volatility has a tendency to compress more often than it expands. And the reason, my opinion, the reason for this is because if you're participating in an exchange, there's no one that's going to buy a market that's just continuously going down, and no one's going to be willing to sell a market that's just continuously going up. So therefore, you can't have an exchange. So yeah, you've got market makers, hedge fund guys, whoever, to come in and kind of, to some extent, control the not only the pricing, but in doing so, that controls the volatility in the market. So we can see here that we've got a lot of compression and really, really, really tight action on the dollar yen. Let's pull it up on the chart. And right here, this is that area that I wanted to talk about. You can see from here to here, this is like 46 pips. Now, this would have been during that most recent hour on the chart that I had up, on the table that I had up. And all of a sudden, volatility jumps up from like, 9 to like 46 pips. Okay? Now, at the core of options trading, a lot of guys believe that you can be profitable if you simply learn to sell volatility. The point of our table and the point of how to use volatility and how to use the volatility indicator we're providing on our site is to kind of give you a guide of when when is when is a time where there's more volatility in the market than usual. And you know that's what those numbers are for. And that's something that you could have easily spotted, that expansion right there, and you would have known, okay, now may be a good time to sell volatility. Also, we're down here in this bottom area on our RSI, and we did get a little reversion back up to the mean, not only in price but also in volatility. As the volatility is stuck itself starts to, slow down and get back somewhere into around an average number. Now, that's one way, and that's originally why we developed our quantized volatility sample, our volatility indicator on our site. But another thing we developed this for is for our Big Daddy indicator. We've kind of taken this formula and carted it over. This is a Big Daddy from just earlier, and again, this is a 15-minute chart this time, but you guys can see really, 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 really tight volatility, and along comes the Big Daddy signal. We have a way to configure your Big Daddy once we release it. There's going to be a way to configure your Big Daddy to filter out low volatility alerts altogether. If that's something that you would want to do, and that's something that I personally do, because as I said, when we get this low volatility from having experience trading the signals, you get that low volatility. There's not a lot of liquidity in the market to go along with that, and that means it's pretty, there's a time when the market can really turn in any direction. Now, let's fast forward. Okay, now the bet is over, and you can see really the entry here and then the exit here. That's probably about 2 pips. That's not a lot. And a lot of times when you get into a binary option and there's low volatility in the market, that's what's going to happen. You're going to just all of a sudden see tight, tight bets, even if you win the bet. It's, which in this case that bet's a winner, but that's tight trading. If you can find some index, some measure of volatility like we're providing on our site, then maybe you can filter out and avoid getting involved in some of these low volatility pockets, and avoid tight trading like that. Now, another thing that we've got plugged into our volatility indicator on our site is time. Many people know from the time-based trading video on last year, time, the particular time of day is very important, and we've marked out with these red areas here. It's not time now, so there wouldn't be any, so that's why I took these snaps. Again, never hear anything in my ear until I'm making a video, but you can see there's a area here. This would be the US. This would be like a hot area within the US Open, and I don't like to trade against the trend. That's what I'm looking for, some real expansion in volatility and a lot of action on the market. And if you're going to try and trade counter trend, uh, some people call it mean reversion. They're speaking just as for its price, but if you're going to try and do that, then it's probably better when the market's ranging as opposed to when you're starting to get that expansion and volatility. That's what this red area is going to be for, to mark out the London uh, Open and to mark out the U.S. Open as well, so that you can be aware and cognizant of those areas and expect that during these hot zones we're going to overdo even the volatility that we've established with our quantization at the top of the hour. Now, let me show you guys one more snappy. This is a big daddy trade from yesterday, and you can see the arrow where we got in here, and you can see when we got in, the market was moving. We got the trigger. The market had already started its downslide, but the market was moving. There was some volatility in the market, and we continued on. It was nice, good signal right below that 200 EMA. Everything lining up. Our crosswalk giving us a strong down just below that 200 EMA. So hopefully we had some room to breathe there. A good area, a good distance away from our support, and this is where we exited at. And they started to pull back because the volatility started pulling into the market, and there goes that mean reversion again, where the volatility has to calm down, or well, it doesn't have to, but it did at a point, and that's a healthier trade. Those are the type of trades I like to take with the Big Daddy. I know we've been talking about releasing the Big Daddy strategy publicly for a while. Guys are asking, well, when are we going to release the final Big Daddy? Well, we were still working on some things to refine, not the strategy so much, because the strategy has been there. Really, at the core, the strategy was there at the top of the year, but some things to make the strategy more manageable, to make the strategy more intuitive, and also to help me with as we sit down to explain everything in detail, and help you become acclimated with trading the strategy should you choose to purchase it. That's why the delay. I want to thank everybody for their patience while we work on that, and I want you guys to try to implement volatility into your trading game. And this uh, new volatility indicator that we just added to our site, Quantized Volatility Sample, is a great way to keep track of when there's expected volatility in the market with our red areas, and to keep track of some good kind of expected um, moves as far as volatility, and to bring mean reversion into your trading game. I hope this helps some guys, and I want to thank everybody who's been supporting the site, purchasing the Green Arrow strategy, and all the guys looking forward to the Big Daddy strategy. Will be out shortly. Until next time, see you guys on the next video. Once again, this is Alfred from BinaryOptionsTutor.com.